Hello and happy Wednesday, my friends. Thank you very much for pressing play, for joining me, for supporting the podcast, for being here, for being alive, for taking a moment to write an email or connect with somebody in the community. Very happy to have you here, and I'm very happy to have Barry Ritholtz joining me today. Unfortunately, we talked a few days before this tariff nonsense went into effect, and we were explicitly talking about his new book, but I still think the interview is really good and very relevant, and I hope that you like it. The book is called How Not to Invest: The Ideas, Numbers, and Behaviors That Destroy Wealth and How to Avoid Them. And it is coming up, the conversation, at 40 minutes into the show. Another robust news segment for you today. Yesterday was a very busy day in news, chaos in the markets. Of course, stocks were up early as traders put their hopes in the Treasury Secretary, Scott Bessent, suggesting that the Trump administration was open to negotiations for lowering his ridiculous tariffs. But then his U.S. trade representative, a guy named Jameson Greer, said, well, but there's not going to be any exemptions from the tariffs for individual products or companies. And then Trump said he was going forward with 104% tariffs on China effective at 12:01 today. Then markets fell again. And by the end of the day, the Dow Jones Industrial Average had fallen about another 320 points. So that's where we're at right now. The S&P fell 500. And the NASDAQ composite fell 2.2%. Apparently, over the weekend, all these captains of industry, these Wall Street billionaires, tried desperately and unsuccessfully to change Trump's mind on tariffs, according to the New York Times. But they failed, and now they've begun to go public, calling out what they call the stupidity of the new measures. And reporters are saying that the industry leaders did not expect Trump to place such high tariffs on so many products. They're shocked to find themselves outside the corridors of power where tariff decisions have been made. Even Elon Musk can't convince Trump. He's one of the people who is doing his best, but Trump is siding with Peter Navarro, who last year was serving time for refusing to answer a congressional subpoena for information regarding Trump's attempt to overturn the 2020 presidential election. So to be clear, Trump is siding with the guy who this time last year was in jail and against the richest man in the world, Elon Musk, who's poured like $300 million into Trump getting elected. And now Elon Musk is going after Peter Navarro publicly online, saying that Navarro is truly a moron, dumber than a sack of bricks, and even called him Peter Retardo. So the boys will be boys, apparently, according to White House Press Secretary Caroline Leavitt. Nothing to see there. But right-wingers are losing their mind. Business interests that are being hit hard by the proposed tariffs are not dismissing the men in the administration as madcap kids, Heather Cox Richardson writes. They're certainly not letting Elon Musk shift the blame for the economic crisis off on Trump and onto Navarro. The right-wing New Civil Liberties Alliance, which is Charles Koch's new group, has filed a lawsuit claiming that Trump's tariffs against China are not permitted under the law. It argues that the president's claim that he can impose sweeping tariffs by using the International Emergency Economic Powers Act is misguided, and notes that the Constitution gives Congress, not the president, the power to levy tariffs. So it's interesting to see the right starting to turn on Trump, including the editors of the National Review, which urged Congress to take back the power it has ceded to Trump, calling it preposterous that a single person could enjoy this much power over the global economy. They decried the raw chaos of the last week that has made it impossible for businesses to plan for the future. They write, what has happened since last Thursday is hard to fathom. Based on an ever-shifting series of rationales characterized by an embarrassing methodology and punctuated with an extraordinary arrogance toward the country's constitutional order, the Trump administration has alienated our global allies, discombobulated our domestic businesses, decimated our capital markets, and increased the likelihood of serious recession. While this should worry all Americans, they write, Republicans in particular should remember that in less than 2 years, they will be judged in large part on whether the president who shares their brand has done a good job. Finally, they say, no free man wants to be at the mercy of a king. That is the National Review, the right-wing National Review, writing that. Senator Rand Paul told the Senate yesterday, I don't care if the president is a Republican or a Democrat. I don't want to live under emergency rule. I don't want to live where my representatives cannot speak for me and have a check and balance on power. So it's a huge, huge deal. And Trump last night spoke for 2 hours at the National Republican Congressional Committee dinner. And he's got everybody terrified. He's not listening to anybody. He's saying crazy things as usual. And that is just a little bit a sense of what happened in the last 24 hours with Trump on tariffs and now the right-wing forces, both in Congress, in electeds, as well as the right-wing think tanks and establishment publications trying to convince him to back off. Well, guess what? He's not. We're fucked. At his dumb, almost 2 hour long speech last night, he said a lot of dumb things. He also said we're going to tariff pharmaceuticals. He said we're going to be announcing very shortly a major tariff on pharmaceuticals. But here's the thing. Apparently about 2/3 of brand name drugs and 80% of generic drugs are manufactured outside the U.S. So when tariffs are placed on pharmaceuticals, the U.S. government and America's patients, who already pay much more than Europeans for the same meds, will pay even more. Genius. Because, yeah, that's the thing. Americans want to pay more for drugs. One statistic I read is that 68,000 Americans die each year because they can't access or afford health care. And now he's going to make sure that number gets a lot higher, of course. The man is pathologically convinced that he cannot be wrong. And so I think everything is going to be just fine. I wouldn't worry about too much. He also said he really thinks that Republicans will be helped a lot by the tariff situation in the midterms. He said, I think it's great. So let's hold on to that quote. Somebody said last night on social media, we're governed by the worst manosphere video on YouTube. Now, even though Trump has started a trade war with every other country on the planet, I'm most concerned and following closely what is happening with China. And they are not taking this lying down. They are going to fight. They are escalating, and it is really an unfair fight. They're going to beat us. There's no way we can beat China in a trade war as far as everything I've read, watched, and listened to. I'll try to get somebody on. I hope that I'm wrong about this. We've talked to people about it in the past, and I'd love to hear what you're thinking, what you're seeing, what you're watching about all of this trade nonsense. I'm looking forward to seeing you at tomorrow night's Hangout, where I've invited the people from my local Indivisible group to join us at the Hangout in hopes that they'll consider becoming part of our community and supporting the podcast and my work and everything that we're trying to do here. So I look forward to hearing from you on all of it tomorrow night. But let me get to some of the other headlines from yesterday, which aren't necessarily directly related to trade. Everything is connected. But let's go to the Supreme Court, where yesterday they halted a federal judge's ruling requiring several federal agencies to reinstate around 16,000 workers the Trump administration sought to fire. The decision to grant the administration's request means the federal government does not have to take steps to bring back some workers who were laid off while litigation moves forward before a federal judge in California. So it's not the last word, but it is a word from the Supreme Court, and it ain't great. And there's other Supreme Court rulings that took place, decisions yesterday as well to follow up on. The Department of Homeland Security is terminating parole protections for people who entered the country through CPB1 app, which they're revoking legal status for nearly 1 million migrants who came to the U.S. during the Biden administration. Roughly 985,000 people used the app to make appointments at a port of entry at the border, with those who entered often permitted to seek asylum and given temporary work authorization. And I've seen video after video of immigration authorities with ICE and different agencies just showing up at people's houses, workplaces, and other places. And it's very hard to keep track of how organized or disorganized all of this is. But the Department of Homeland Security said yesterday in a court document that the IRS has agreed to share certain tax information filed by undocumented taxpayers with Immigrations and Customs Enforcement. So IRS sharing information with ICE, not good. But also, doesn't that debunk the idea that immigrants don't pay taxes? Yeah, we know they pay taxes. Everybody says they don't, and yet ICE is using IRS information to find them. Also saw this indefensible news. The Trump administration is ending most, if not all, remaining U.S. aid for Afghanistan and Yemen, aid sources said on Monday, and what the UN World Food Program said could be a, quote, death sentence for millions. In a normal time, in a normal news cycle, that would be top-line headline news. But in this one, everything is crazy, so not necessarily want to make sure I mention that. This asshole judge, Matthew Kaczmarek, is very predictable. He's a U.S. District Court judge in Texas that Republicans bring many of their issues to because he always gives them what they want. Well, yesterday he tossed a Biden-era policy to increase staffing in long-term care facilities that participate in Medicaid or Medicare programs. That's going to have consequences and repercussions across the country. A lawsuit worth watching is from the state of Maine. They sued the agricultural department yesterday, arguing that the agency violated the law when they froze funding to Maine last week and that the freeze threatened school meal programs. And be careful out there on the roads, folks, because the federal agency in charge of trucking safety on America's highways dramatically slowed the pace of enforcement actions after the Trump administration took office in January, according to safety data, agency records, and interviews with people familiar with the changes. And the National Park Service yesterday reversed edits and restored content to its webpage about Harriet Tubman and the Underground Railroad in the wake of news reports and public backlash over the changes. So I guess that's a tiny piece of good news before they try to do it again without getting caught. Few other news stories to mention in this chaos. How about this? The Justice Department is disbanding a unit responsible for investigating cryptocurrency crimes. I can't imagine why they would do that. A federal judge ordered the White House to restore the Associated Press's access to some events. We'll see if they follow that order. And in Nevada, a man was arrested after 7 tigers that he claimed were his emotional support animals were seized from his property. So that guy, you got to feel bad for the guy who lost his 7 tigers that were his emotional support animals. I can't believe they never ate him. That's wild. I feel bad for him, but I feel good for the tigers. I don't know. Maybe they like the guy. Who knows? All right, those are the headlines that I've got for you. Quickly to a couple of emails that I got from listeners. Barbara Greenfield emailed me and said that she is now addicted to the show Reacher. I'm so sorry, Barbara. Kevin emailed me and said, I love your podcast. If you're looking for new guests, I recommend interviewing Michael Lewis. He wrote the best-selling book, Who is Government? And he's got all kinds of stories of federal employees who actually are and what they do. It's great. It's a really important book. I do have it, and I'm going to be interviewing one of the contributors, I think. Kevin, thank you for that email. The love is still coming in from Podjam, too, so thank you very much for all of your emails and feedback on that. I really appreciate it. I'm kind of still there myself, and those of you sending me your nature photos, keep it coming. Getting outside, connecting with nature has forever been a solution for me, an important thing for me, and so many of you I know. Get outside, and to prove it, send me your hashtag vitamin N, your nature photos. Just make sure they don't include, it's the only rule, any man-made things at all. Fences, flagpoles, that'll disqualify you. Unless it's really special and beautiful, then maybe I'll include it. But send your vitamin N and all the rest of your email to standupwithpete@gmail.com. All right, now it's time for the sound I've gathered for you, the clip show. Everybody loves the clip show. And we also love a good misspeak here on the Stand Up with Pete Dominick program. Always have, including if it's me. You guys are great at calling me out, especially Vicky, longtime listener, whether it's at Sirius or on the podcast. So I will do that to you and anybody else. Here's Congressman Tom Emmer screaming at the National Republican, Congressional Convention last night where Trump spoke for 2 hours. And I believe that he called President Trump a cunt in this clip. So here it is. You tell me what you hear.
President Trump is counting on us.
Oh, what's that?
President Trump is counting on us.
Sorry. Okay. I just had to start with that. Now, here is Rand Paul, Senator Rand Paul, who's very much against these tariffs. He's at least consistent on that. And he was on Fox Business Larry Kudlow, who used to work for Trump, brought him on to make the case against tariffs and hopefully stage an intervention for Trump. Here is Rand Paul yesterday on Fox Business.
Mr. Trump is doing. Tell us why. Tell us what you're thinking.
Well, I'm kind of old-fashioned, Larry. I don't like taxes, and I don't want more of them. I also think that if you tax something, you get less of it. And I don't want less trade. I want more trade. There's a fundamental argument we have to have in this country. Is trade good or bad? The president and his counselors seem to think that in trade, someone gets ripped off. The truth of the matter is this, that all trade is mutually beneficial, and really the U.S. doesn't trade with China. You trade with Walmart. So when I go to Walmart, if I pay $10 for a shirt, I want that shirt, and they want my $10, and we both go away from the deal having succeeded. We mutually benefited. That's the only reason trade happens. And then if you add it all up and say, oh, China's ripping us off, it makes no sense. Trade deficits are not real accounting. It's a fake accounting, and it doesn't mean anything. What means something is if you look at trade deficits in proportional to prosperity, the higher the trade deficits, the more prosperity. The lower the trade deficits, the less prosperity. We get a reduction in trade deficits when we go into a recession. We get an expansion of trade deficits when we're in a boom. So really nothing about a trade deficit gives any real useful instruction to the economy.
Well, actually, I don't know whether you're surprised or not, but I agree with you about trade deficits. Actually, I've been riffing about it on the show.
All right. Wow. How about that? I think you explained that pretty well. I think that's accurate. This is a whole thing about Trump's psychopathy. Is that the word that we're using? And the idea that he thinks we're getting ripped off. He's just wrong. He doesn't know what he's talking about at all. And it's this weird kind of masculinity trap that he lives and falls under, that he's convinced of somehow. And he's trying to convince everybody else of that. And it's preposterous, obviously. But no one seems to be able to get him to back off of it, including Larry Kudlow and Rand Paul on Fox Business. But it's interesting to see what the Fox audience will react to more of that type of rhetoric and communication. Let's see what Jamie Raskin had to say yesterday on the House floor.
While delicately carving out an exception for Trump's friends in the Home Office back in Russia, when asked why Putin uniquely escapes the wrath of Trump's global trade war, we're told it's because Trump doesn't want to interfere with the negotiations taking place between Russia and Ukraine for a ceasefire, an explanation that might have somewhat more force if Trump had not made sure that the tariffs do apply to Ukraine, as they do. The basis for this most imbecilic and destructive trade war in the history of the world is the profound economic research and policy writings of one Ron Vera, a completely fictional economist conjured up by Trump advisor Peter Navarro, a real person who Elon Musk just called, quote, a moron and dumb as a sack of bricks.
So Peter Navarro apparently has been referring to this guy, this economist Ron, whatever his name was there, and it's actually a made-up person that Peter Navarro made up and just switched the letters of his last name around. Really, like there is apparently no credible economist who thinks this is a good idea, so Peter Navarro had to make somebody up. I can't believe that this is what we're living through, but it is. That's exactly what you're seeing right now. And why would Peter Navarro do that? I guess he just wants power, to be close to power. He loves the idea that Trump is leaning on him and that he's making up theories to make that so. That's what it would seem to be. And you probably saw this. This went viral yesterday, but 60 Minutes, if you haven't seen that segment about the migrants that were sent illegally to El Salvador to be tortured, they found that 75% of those who were sent did not have criminal records. And so yesterday, the Attorney General, Pam Bondi, who's a criminal herself as far as I can tell, she was asked about this outside the White House, and she just walked away. It's about a 1-minute clip.
60 Minutes found that 75% of the immigrants who were sent to El Salvador do not have public criminal records. Is Is that true?
Do you mean in our country?
The Venezuelan migrants who were sent to...
Okay, well, they're not Venezuelan migrants. They're illegal aliens from Venezuela who should not have been in our country, who are committing the most violent crimes. So if you committed a murder in our country, we're going to keep you here, and we're going to seek the death penalty, and we're going to keep you in prison because our victims' families deserve that. But we don't have to charge them with every crime. We can deport them and get them out of our country and save room in our prisons because they should have never been in our country to begin with.
So you confirm they didn't commit a crime,
Thank
right?
you.
Is that what you're confirming?
Thanks, guys. Appreciate the time. Thanks, Ron Bondi.
You're confirming they did not commit a crime. Is that what you're confirming? And she just walks away. And now here is one of our heroes and leaders. It's Jasmine Crockett yesterday, and whenever I find a clip of Congresswoman Jasmine Crockett, I like to share it.
I'm going to talk about efficiency and worry about some solar paneled whatevers. Let's talk about the fact that as of March 30th, Trump's golfing has cost us approximately $26 million. And the last time I checked, we're not getting anything in return for that. So I will get back on my remarks, but I just wanted to point out that maybe we need to talk about the president and his golfing habits. In fact, he decided that he was going to golf as the markets were tanking. He decided he was going to golf instead of receiving for heroes who died serving this country. He has decided that he wanted to play games while the rest of us are really trying to make sure that we can serve the American people. So, Mr. Maroney.
Oh, I always love it. Always love hearing from Congresswoman Jasmine Crockett. More of that, please. And here's a guy who's always been a villain to me, John Bolton. He was on CNN last night talking about how tariffs are a huge opportunity for who? China. So I guess sometimes John Bolton's right.
China's embassy in Washington released a statement. It urges the White House to, quote, immediately correct its wrongdoings, end quote, warning that China's response, if American tariffs stay in place, will, quote, continue to the end. So, Ambassador Bolton, I know you're not an economist, but just from a strategic perspective, do you think China is going to blink and try to cut a deal with the White House?
It certainly doesn't look like it, but what Trump is doing is a huge opportunity for China worldwide. These tariffs are a form of economic illiteracy. Trump has no idea really what he's talking about. He doesn't understand how tariffs works. He has said as recently as a few days ago he views trade surpluses and deficits as like a profit and loss statement, which they certainly are not. So what he's doing has put us in a very vulnerable position and probably in the worst position possible to go after the real country problem in the international trading system, which is China. Instead of taking on the country that's stolen our intellectual property for decades, among other things, by gathering our allies together, all of whom also suffer from China's intellectual property theft, and engaging in concerted action, we're at war with our largest trading partners while we're about to go to war with China as well. It simply makes no sense, and it's just sad and depressing that more Republicans haven't stood up and said that. This is illiteracy.
Illiteracy, says John Bolton. Well, the big headline testimony yesterday came from Trump's trade representative, who's a guy named Jameson Greer, who was grilled by both Democrats and several Republicans. And so I decided to keep the entire questioning from one Democrat and one Republican and decided to roll on it and share it with you to give you the context. But it's worth seeing some of the other questions being asked. The guy really got drilled, but it's more about learning the points of view and understanding how trade, because I think we're all trying to learn what the hell this is all about, trade. I've been talking about this issue for years and years, and I still don't fully understand it. Trade policy, global trade, the history of trade, all of the different inputs, the leverages, the winners, the losers, and how supply chains are all very much involved with several parts going into an end product and how they come from countries all over the world. Anyway, there's a lot to learn. It is interesting, and it's certainly something that impacts all of us and what we buy and how we buy. So I thought I would keep these in full context here. This is first Elizabeth Warren, of course, Democratic senator from Massachusetts, and I thought this was pretty interesting. Warren is always pretty much one of the best senators when it comes to anything financial and pretty much everything else, I think. This is about 10 minutes, these two clips from Elizabeth Warren, and then you'll hear Tom Tillis, so if you want to skip it. But I thought it was worth listening to, and that's usually how I judge these things, so here you go.
Thank you, Mr. Chairman. Donald Trump is single-handedly driving this economy off a cliff. With no evidence to back him up, he's claimed emergency authorities to slap new tariffs on nearly every product we import from nearly every country. But Congress has the power to reverse these tariffs, and we should do so immediately. Tariffs can be a tool to help build things in America, but Trump has slapped tariffs on, then off again with no rhyme or reason, and the uncertainty about the long-term rules makes companies far less likely to invest in manufacturing or jobs here in the United States. If Congress doesn't stand up to Trump, economists predict a recession before the end of the year. And Fed Chair Jerome Powell says we're in a real danger of, quote, both higher unemployment and higher inflation. Translation, Trump's tariffs will push millions of workers out of jobs and push prices up at the same time. So, Ambassador Greer, we've heard a lot of conflicting statements about whether these tariffs are here to stay, how many more rounds of on-off we're going to do. So let me ask the question from a different perspective. Ambassador Greer, we lost 700,000 jobs each month in the last recession. If 700,000 Americans lose their jobs, will the Trump administration suspend these tariffs?
Senator, I think the economists who are making these projections, who often are in favor of fully unfettered free trade, are the same ones who said in the first Trump term that putting tariffs
Greer,
I something that's going to happen,
let me just
Senator.
stop you there. I'm not asking about projections. I'm asking if the numbers show that 700,000 people have lost their jobs because of these new tariffs that Trump has slapped on, will the administration reverse course and lift those tariffs?
Senator, that's not going to happen. We've lost 5 million manufacturing jobs over the years, which is the number I'm most worried about, and we have to get those jobs
back. So I take that as a no. Let me try another one. Moody's says that if the Trump tariffs remain in place, we will definitely plunge into a recession, which will ultimately cost 3.5 million Americans their jobs. So, Ambassador Greer, if Trump's tariffs push 3.5 million people out of work, will the Trump administration reverse course and lift those tariffs?
Senator, the Wall Street analysts are wrong. They never want to have any kind of change to the status quo.
Right or
but that's who you're quoting to me, Senator.
I'm giving you a number. If the number is 3.5 million, if it never comes to pass, you don't have to worry about your answer. But if 3.5 million people lose their jobs because of these tariffs, is the Trump administration prepared to lift them?
Right now, this minute, we're working on negotiations with countries who believe they can achieve reciprocity with us and get their trade deficit down. And that's the emergency we're focused on. There's not going to be a situation where years from now we've lost millions of jobs.
Let me try one more time. If Trump tariffs push workers out of their jobs and raise prices, as Fed Chair Powell has predicted, will you reverse course then?
I think also with respect to Chairman Powell, who I don't know personally, but I know the president makes decisions on trade, and he rarely takes advice from Chairman Powell on this. We found in Trump 1 that you could put tariffs on China and you could make it work and have lower lower unemployment, lower inflation, and increase real median household income over time as we reshore. And that's what we have to do, Senator.
What I'm hearing you say is that no one can hear a rhyme or reason to why the tariffs are off again, on again, off again, on again. But what you're telling us is the fact that hundreds of thousands, even millions of people could lose their jobs and that prices could go up will not be a factor for you or for Donald Trump for rolling those tariffs back. Look, if Republicans are serious about protecting American jobs and fighting inflation, then they can join Democrats right now to pass a resolution to fix Trump's reckless tariffs. This economy is teetering on the edge of collapse. We have the power right here in the Senate and over in the House of Representatives to take this authority away from Donald Trump. We can get this voted on. Senator Wyden and I have already are about to introduce the bill to do that. And if Republicans are serious about not playing the red light, green light with tariffs, but instead about protecting our economy, our families, our jobs, and keeping prices low, then Republicans should join us on that. Thank you, Mr. Chairman.
All right, that's Elizabeth Warren. And now let's go to Senator Tom Tillis of North Carolina. This one got a lot of attention yesterday because he kept asking whose throat he would get to choke if things did not work out well.
It looks like we've got a novel approach here in terms of an a la prima approach. I'm not a trade expert, and I'm not going to question it at this point. I do have a question about, at the end of the day, the other thing in management consulting we like to focus on is this concept of one throat to choke. In other words, when you're finally taking a look at a strategy, someone has to own it, and you can't say that it's the president or the vice president. So my first question to you, in this scenario, the decision maker who decided the a la prima approach, who has obviously had to have spent time anticipating what we saw in the markets and some of the pushback, I'm assuming this all got gamed out because it's a novel approach. It needed to be thought out. Whose throat do I get to choke if this proves to be wrong?
Well, Senator, you can certainly always talk to me, but
are you at the tip of the spear?
Well, I'm at the tip of the spear for certainly.
Did you propose the a la prima approach?
So, first of all, I would push back, Senator, just a little bit on this. For now, we've excluded pharmaceuticals and semiconductors to take a different kind of approach.
So let's get
and we've excluded
question.
USMCA.
Section 232 and 301, we know particularly Section 232 is still on aluminum. Section 301 is Chinese imports, where there's no other provider. I overheard you say that maybe, or I thought I heard you say in response to another question, that for the near term there won't be any exclusions. Is that true of China, where they have said the U.S. is unilaterally bullying and completely groundless and they're going to fight to the end? Are the 232 and 301 tariffs exclusions on the shelves until we get to a reasonable agreement with China? I'm just trying to answer a question that I have several people in North Carolina asking.
So the president, again, is the final decision maker on all of these things, and he has directed that there not be exclusions or
There will not be any exclusions on steel, aluminum, or any products that are only manufactured in China for the foreseeable future until China determines what the end is, because they said they're going to fight to the end. Again, I'm just trying to communicate questions that I've asked.
Policy,
so there will be
sir.
No exclusions. Yes. I won't waste your time asking for them. That's the main reason I wanted to ask the question. So again, I'm just trying to get my head around the logic of an a la prima approach, and I'm waiting to be. I'm waiting to see it be successful. But it just seems like we've decided to begin a trade war on all fronts, and that's okay if the person who thought this through has an answer for why you go after partners that we have a very long storied relationship with. Maybe we give some developing countries a break because we're trying to actually get their economies functioning, make them look to the West versus to Chinese investment. So it just seems like I'm getting my head around the a la prima approach. I'm not condemning it because I'm not a trade expert, but I still, at some point, and I understand that you are the trade rep. So if you own this decision, then I'll look to you to figure out if we're going to be successful. If you don't own the decision, I'm just trying to figure out whose throat I get to choke if it's wrong, and who I put up on a platform and thank them for the novel approach that was successful if they're right. But here's what I'm really worried about. I'm not going to ask any more questions. I'm just going to tell you, every time we talk about people having patience, we need to understand that the founding fathers made damn sure that patience was never more than about 14 months, really. Everything that we need to do to know what the political environment is going to be about next year, it's got to be done by February of next year. So in your mind, do you believe that over the course of the next 14 months, we're going to have a level of certainty, and the people in the trailer park that I grew up in who are going to bear the brunt of some of these short-term cost increases, maybe some job displacement for a period of time, how are they going to be feeling Groundhog Day 2027 or 2026? Do we feel like the majority of this will be resolved and I'll be able to thank whoever thought that the alla prima approach was a good idea, because that's about the timeline we've got to work with.
Well, Senator, these people who voted for the president is the same situation I grew up in. You know that.
I agree. But let me just finish here because I don't want to get in the way of my colleagues. Yes. I'll be 65 in August. Every day, 11,400 people celebrate their 65th birthday. That's 4 million a year. So let's say from 60 to 65, people are looking at their 401k statements. They did vote for President Trump. They voted for me. I hope that they will again in both cases. Well, maybe not the president, but I intend to run for re-election. I'm just trying to figure out if they're going to feel good about this, because a long-term play in American politics and a long-term play in American policy, public policy formation, is about 12 months from the beginning of an administration. I wish you well, but I am skeptical.
I wish you well, but I am skeptical. Tom Tillis of North Carolina, Elizabeth Warren there. And now I'm just going to give you some comedy. Let's go to CBS. My old friend Stephen Colbert on The Late Show last night.
It is April 8th, and I hope you have finished your Christmas shopping. Because today was officially the last shopping day before tariffs on imported goods come into force at midnight tonight. So don't forget on Amazon to click 23-minute shipping. Obviously, no one is happy about what this is going to do to our ability to buy stuff, except for one group, husbands forced to sit on the little chair in the dressing room at Nordstrom Rack. You know their slogan, yeah, I like that one too. The tariffs are already hitting America right in the joystick, because gamers were supposed to be able to order Nintendo's Switch 2 starting tomorrow, but now Nintendo has delayed Switch 2 pre-orders in the United States over the Trump tariffs. What? I need my Nintendo. What am I supposed to do without our new Mario game? Take a bunch of mushrooms and jump on turtles in real life? That's what got me banned from the petting zoo. With Trump's tariffs looming over the economy, today was a wild ride on Wall Street. By 10:28 this morning, the Dow had soared up 1,400 points. But by the end of the day, it was down 320 points, which led the AARP to issue the statement, "You should have retired at 10:28 this morning."
Oh, I love it. And you know what? Here's a little bit from Jimmy Kimmel as well.
It's all so serious now. This morning, my financial advisor called me, asked if I could spot him $20. The Dow, the NASDAQ, the S&P, all down again today. Somehow Donald Trump has managed to transform the stock market into Kanye West. But the good news is the president wants us to know he's doing just fine. He wrote, "I am pleased to report that my long-scheduled annual physical examination will be done at Walter Reed Army Medical Center on Friday of this week. I have never felt better." It's funny because the rest of us have never felt worse. And by the way, why do we even need to know that? Like, if my dad told me he was going in for his annual physical on Friday, I'd be like, all right, well, if the doctor says you're going to die, let me know. I mean, maybe he wants to make sure we know it's a scheduled thing and not an emergency. Either way, I bet it's going to be an excellent report. Let me guess. His physical strength and stamina are extraordinary. His blood pressure is astonishing. And he is by far the healthiest president to have single-handedly tanked the world economy overnight. This man.
All right, there you go, my friends. The headlines and the clips for you, and I should have it up by hopefully 7 a.m. latest today. Sorry, I usually try to get it up by 6 these days. Been getting up early, the new schedule, and it seems to be working. Nobody seems to be complaining, but I usually get to bed around 9 o'clock and try to get up around 4 o'clock, get the headlines and clips finished and put together the whole thing for you. That's what I've been doing, a little look behind the curtain of the Stand Up with Pete Dominick studios and workflow. My producers here seem to be thinking that it's working a little bit better, and they aren't real people. So it really matters because they don't exist. You are my producers. I cannot do the show without you. I always want your insights. Let me know when you watch the show, listen to the show rather, hopefully watch the show as well, because I'm trying to ramp it up for YouTube and posting interviews over there, youtube.com/standupwithpete, up to 3,000 subscribers. on YouTube, and I think we have like 2,000 on Substack. Again, I'm not posting much every day at either. I need to, but if you can go subscribe to the YouTube and the Substack, they're linked in the show notes today. Easiest way to get to them if you can't remember the addresses. But now it's time to get to Barry Ritholtz. Ritholtz, of course, is one of your favorites. He's a regular. We talk about finance, we talk about economics, and we talk about his new book, specifically on today's show. Unfortunately, I did this interview before all of the tariff chaos went into effect, so I feel bad. I wanted to do an addendum with Ritholtz to this interview, but I also wanted this interview to be dedicated to his book. He's obviously a good friend of mine in real life. I went to the book release party when he released it a couple of weeks ago, and we've been trying to get together to do this interview, and we finally got to. So I hope that you will consider buying the book. It's called How Not to Invest, the Ideas, Numbers, and Advice That Destroy Wealth and How to Avoid Them. It's also available in audio format. You can listen to it as well as buy it and support Ritholtz that way. But here's my conversation with Barry about the new book, and let's get it started right now. Yes, the official book interview. Very excited to have you. Congratulations on the book. You've already done several high-profile interviews. I'm very happy just to get you on the show. What a big get it is for us. How Not to Invest, the Ideas, Numbers, and Behaviors That Destroy Wealth and How to Avoid Them. What has been the reception? I was at the book party. There's a lot of big wigs there. You've been on all these big shows. How are you feeling? It's been out for what, a couple weeks?
2 weeks, yeah. Very gratified. The reception has been really positive. I was trying to strike a tone that was a little lighter than Bailout Nation, a little more conversational, and without wagging my finger at people, just trying to sneak the lessons in by making it a little fun, and hopefully I hit that mark.
You definitely did, according to me. What the hell do I know? You have been sitting down with all kinds of big guests, big interviewers. I just saw your interview with Scott Galloway. That was a little too in the weeds for me with you and him, so we've got to dumb it down a little bit for me. But I feel like the book does that. I feel like he brought it up a notch from the book, because the book is for all of us, I would say.
Yeah, the dumbing it down is the wrong phrase I would think bring to me. It's about just making things accessible. I will tell you, having spent my whole professional career trying to explain stuff to my mom, who's a real estate agent, to my wife, who's a fashion illustrator and design and art teacher, if I can make them understand finance, then any layperson can. And what I learned over I want to say years, but it's really decades, is that the further you go outside of mathy economic analysis and quantitative data crunching to like stories that people can relate to, the easier it is for them to grasp the takeaway. So probably the single best example of that is Wall Street, finance, financial television, media. They spend a lot of time forecasting what's going to happen in the future. There's a ton of speculation. There's a ton of opinion mongering. There's just like a lot of nonsense. And I found that by going to Hollywood, going to TV, movies, music, and show how little the professionals know about what's coming next, we all can relate to that. Like when you stop and say, wait, the major studios all passed on E.T., they passed on Star Wars, they passed on Raiders of the Lost Ark. A beloved film, Princess Bride, couldn't get made because no one believed it. And then, of course, the reviews of the Beatles' first appearance on Ed Sullivan, they're hilarious because anytime something innovative comes along that is groundbreaking, people who came of age in a different era have a really hard time adjusting to that.
I think it's a great point. I strike, dumb it down, and I change it to making it more accessible. That's what your book does. But you're not supposed to have a title of a book that's like a negative, how not to invest. The title is supposed to be how to invest. Most books are in this category are what to do with your money, how to invest, or some variation of that. And not only is it a bad title, but it's also a bad practice to do what you've always done, which is to point to all of the wrong things and debunk myths. And as you said, nobody knows anything. No experts about movies or music knows anything. So it's like you've been playing this role of critic in a way, but you're doing it in proving what not to do often, and including your own mistakes. Did I have that right?
Yeah, that's exactly right. And the funny thing is, look, it's been 15 years since Bailout Nation, and over the ensuing decade and a half, I had a lot of friends, family, publishers, other writers say, hey, when's the next book? And my answer was always, I'm busy building the firm, working with my colleagues, and besides, there's been a million how to invest books. And people are still, like for a century, 100 of them come out a year. And everybody is still a pretty mediocre investor. Why don't we need another garbage how-to book to throw in the pile? And I came home from vacation, that sort of dead zone between Christmas and New Year's.
Oh, yeah, we call it the taint week. I named it that.
The perineum week. I came home. And I had a couple of days to kill before everybody goes back to the office in January 2nd. And Morgan Housel had been nagging me. You really should do a book. It'll be so easy. And I just start looking through the quarterly calls I do for clients, the notes I've sent out, to say nothing of specific commentaries and analyses and columns. And I definitely noticed a pattern, which was I spent a lot of time debunking a lot of bullshit. So I started here. Take a look at this. This was on my bulletin board, which is now just covered with other crap. But these were on my bulletin board. I just started writing ideas down.
Index cards. For those listening, a whole bunch of index cards with your writing on them.
3x5 cards. Some are green, some are pink. And I would put the book is broken down into 4 sections. Each of the first 3 sections, bad ideas, bad numbers, bad behavior, are broken down into 3 subsections, and when each of those are a dozen really short chapters.
Yeah, I love
Page
it.
and
I
a
love
half,
the way it's
2
written.
pages.
Yep.
They're fast and easy to read. The book looks intimidating because of its size, but there's a lot of white space in there. There's a lot of blank half pages. I had to argue with the publisher. They wanted to start each chapter in the middle of the page. I'm like, it'll be 900 pages long. You got to start it at the top. So we saved some trees doing that. Once I started putting these on the board, the organizational structure revealed itself, because when you think of mistakes, errors, bad decisions, they really fell neatly into these 3 things. We believe stuff that's nonsense. We don't understand the numbers that underlie investing, both to the upside in terms of how compounding work and to the downside, how frequently markets engage in volatility. And then lastly, we exhibit really terrible behavior. And so if we could just not do those 3 things, we would all be so much better
There's
off.
too much advice out there. There's too many get-rich-quick ideas, channels, books. There has been, as long as there's been money. Bad ideas, bad numbers, bad behavior. Section 4 of the book is good advice. So it gets, in the end, it takes a turn where you're not as much criticizing all of the things that people get wrong and then telling people what you've gotten right.
Yeah, that's the plot twist is at the very end.
Yep.
10 short chapters. All right, I've just spent 377 pages telling you what not to do. Here are 10 things to do, and if you can do these, you'll be much better off. And by the way, these are the things that we do in the office when we're managing money for clients.
I feel like one of the most important questions you ask, and by the way, just going to the end of the book, good advice, is how disciplined are you? So if you're talking about investments, you have to have some discipline, which means not to bite the hook, take the bait, get distracted. And that's really hard to do if you're paying close attention to your money. And as well, if you think you know a thing or two. So that's not me. I don't pay much attention and I don't know anything. But it's a lot of investors that think they've read a lot, they've experienced a lot, they're paying close attention. And so they know a lot. But the question of discipline is something that can be applied to not only your investments, but all sectors of life. Tell me about what you mean here.
Yeah. So first, a lot of that thematically comes from, I recall being on vacation in Puerto Rico in a place that was a beautiful beach. I think it was El Dorado, something like that, but not a lot of internet. And I purposefully, when I go on vacation, I want to sit on the beach and read, maybe do a little sailing or snorkeling, but just unplug for a week. And so I was not very tapped into what was happening in the market, but I always feel like I should just check in to see what's happening. And so with limited internet, I would just flick on the TV and put on financial television for 15 minutes, 20 minutes each morning. And I was aghast at what I saw. I was genuinely shocked at the degree of just frippery and tomfoolery. I'm reaching back centuries for those words, but the sort of, you don't realize how much of what passes for news is really opinion, speculation, guesswork, forecasting. I feel, I think, I hope. No, just tell me what the fuck is going on. Stop sharing your hopes and dreams. That doesn't help me. And so I came of age in this industry on a trading desk where there was always multiple TVs on to all of the financial channels, but usually muted. And so I forgot what that was like to actually see how these things affect people. We've talked about this before in 08, 09. I recall flipping on the TV and saying, we got to be getting close to a bottom because they're running around with their hair on fire like the world's coming to an end. And once you realize how emotionally influential media can be, you have to take some steps to protect yourself from the worst of it. That doesn't mean just don't read any news and shut everything off. Just be aware that everybody is selling you something, and you have to ask, what are they selling, and what's the cost of buying these things?
Talk about the media. You just mentioned it there. You have a chapter in part one called, is it Media Madness? Yeah. And we've talked about this over the years a lot, especially the 24, CNBC and Fox Business, Bloomberg, and any cable, CNN, any network that needs to be on 24 hours needs content, needs material. We can talk about the good, we can talk about the bad. But let's just talk about the elephant in the room. It's you. Your entire business model, market, and branding has a lot to do with the media that you've been a part of or that you created yourself, specifically your blog, obviously, which is a written form, your articles, and so on. You've appeared on all of these networks. You have your own podcast. Your partners have a podcast, YouTube channels, etc. You are the financial media. So go ahead and criticize it.
Well, yes and no. Most of just about everything we have created over the years has been, and by the way, this dates back to the late 90s and 2000s, a decade plus before I had a wealth management firm. It was always a pushback to, this is wrong. I recall getting into an argument with the editors of the Wall Street Journal in 05 or 06. I don't even remember the exact date, trying to explain that no, housing isn't getting better from March to April to May. That's seasonal. It gets better every year. Instead, look at it year over year, and you could say, is April 2006 better than April 2005? Not consistently. Housing sales bottom in December, January, and they peak in June, July, and there's a reason for that. People want to get into the new school district before the new school year starts so their kid doesn't start in the middle of the year and kind of feels like an outsider. It's very seasonal, and if you don't understand that, like there's a reason we don't freak out over the unemployment numbers every December 26th. Hey, guess what? All these retailers hired a bunch of people for Christmas sales because depending on the product, it's 30, 40% of annual sales, and they do all the layoffs in January. We don't lose our shit because suddenly, oh my God, unemployment spiked. No, it's seasonal. And the fact that I couldn't get editors to understand that is because they at least they used to be. They also used to be English and creative writing majors, and very few of them studied, forget economics or business, just probabilities and statistical analysis and basic math. That has changed over the past 20 years. I've been finding that the average, what they used to do is take a junior person and throw them. You're covering the Fed. Now it's a really senior person that covers the Fed. But back in the day, it was like they would send you to the Federal Reserve ghetto to earn your stripes, and then you had to progress to a more interesting subject. So I spent a lot of my time on the blog. The blog started in 98 on GeoCities, TypePad in 2003, and then it moved to WordPress in 08, which is where it's happily been ensconced. When I started the podcast in 2014, I had been writing for the Washington Post. And by the way, in all of these episodes, there is frequent criticism of the media because I didn't think they consistently did a great job. There was an acknowledgement of errors. I was doing with the Washington Post, I would do a mea culpa every year. Here's what I got wrong this year, and here's what I learned from it. And I'm on both sides of the media microphone. Sometimes I'm a creator of content, right? And sometimes I'm a consumer of content. And wearing both of those hats gives me some insight into media that perhaps not everybody has. And here's the crazy thing. As much as I'm critical of print and TV and radio, I'm a big fan of those things, especially my favorite writers,
when done,
broadcasters.
Yeah.
Because when someone does a really good job with that, it's incredibly helpful. And the problem is 9 out of 10 quotes Theodore Sturgeon, famous science fiction writer of the 50s, defending sci-fi. Someone said, how come so much science fiction is bad? He goes, 90% of everything is crap. And that's a pretty good guideline. So I have a run of my favorite writers and researchers and analysts and economists and people who have demonstrated they have a process, they're thoughtful, they've been through a few cycles, they didn't just get lucky once throwing a dart. Their approach, hey, no one's perfect, but they're more right than wrong. And even when they're wrong, they own it and they move on.
You say in this first part, bad ideas, lose the news and just listen to TikTok investors. I'm kidding. He doesn't want you to listen to TikTok investors, but connect the two. And then this is one of my favorite sections of the book because then you document all kinds of media stories, narratives, even magazine covers that clearly got it wrong. It's easy now to look back and see how wrong they got it, why the Apple Store will fail. Forget the iPhone, BlackBerry is still the one to beat. And can anyone catch Nokia? And I think if anybody knows anybody, they know that at least two of those brands I just mentioned are no really longer around very much. Talk to me about how we lose the news and who not to listen to and how these big, high-profile media outlets get a lot of things wrong. In retrospect, it's easy to see. Maybe not.
So the key takeaway is we all get stuff wrong all the time. And that's the whole concept of the book is just make fewer mistakes and you're way better off. I'll talk about Charlie Ellis in a minute, but what's funny, a lot of the stuff I wrote early in my career, no one knew who the hell I was. It wasn't until I more or less got the financial crisis, both warning about it and then sounding the all clear signal in March 2009 that anyone really started taking me seriously. I recall doing the episode of Kudlow on CNBC when the Business Week forecast came out. There's a funny story about that. So a buddy does it every year, and for whatever reason, he couldn't do it one year. Maybe he was in between firms and didn't want to participate. So he introduced me to the editor, and I had not that long earlier written a piece in TheStreet.com, I want to say 2004, called The Folly of Forecast, and explained why nobody gets these things consistently right. And the world is too random, and 12 months out, like so many random things can happen in a given year. Hypothetically, a pandemic, or the Fed raising rates 500 basis points, or the Russian invasion of Ukraine, or the war between Hamas and Israel. Nobody expected those things, and so your forecasts are completely derailed. And so I pitched the then editor of Business Week when it was owned by McGraw-Hill, hey, why don't we do a little counter-programming and opposite all these forecasts explain why forecast is folly and no one really knows and blah, blah, blah. And I'll never forget her answer. She said, look, it's a big double issue. We sell a shit ton of ads. You want to participate or not? So I'm like, sure. And I had written a piece for TheStreet.com called Cult of the Bear that explained Reinhart and Rogoff, two very famous economists who study financial crises, had a short paper out describing what happens when you have a leverage-based financial crisis. And there were 5 examples. The U.S. in 1929, Japan, Mexico, Helsinki. I never remember the 5th one. And one of the takeaways was real estate, which is normally pretty steady, in a financial crisis driven by debt, falls about 30% in price. 30%, that's giant. So I ran an analysis and said, let's look what happens to the Dow if real estate falls 30%. And the number I came up with was 6,800. So, and by the way, that wasn't a forecast. That was just, hey, if these guys are right and this financial crisis that we're in the early days of unwinds and real estate drops 30%, expect the Dow to go from 14,000 down to 6,800. So I'm like, you know what? A double issue? Great. I'm going to use these numbers just to throw it in. And so everybody is all clustered up here, and all the way down at the bottom is Barry. And I go on Kudlow the week after it comes out, and that's all he wants to talk about. And I was his whipping boy for a solid year. And then by the end of 2007, stuff starts to roll over, and then into 2008. And then all of a sudden I'm on Kudlow every week, twice a week, 3 times a week, like the guy who saw it coming. And it was like, hey, listen, I don't really believe in making forecasts. This was just a what if. Let's war game this scenario. That one of the things within the book is try and think probabilistically. Don't think in terms of binary. Hey, it's a bull or a bear. We're going up, we're going down. Try and think of what are the various possibilities that can happen. If you want to put a rough 10% chance of this and 20% chance of that and 30% chance of this and then 20 and then 10. If you want to think of it that way, hey, then you're preparing yourself for all manner of outcome, as opposed to you're either going to be wildly right or wildly wrong. That's not really a whole lot of use to anybody, those binary forecasts. You're much better. It's like when you go for a drive to a place you don't know. Here's one route, and if there's traffic, I'll go that route. And here's my plan C. Having that in your head, well, now we all have GPS in it. Your phone or your car automatically reroutes you. Not thinking about the world in terms of coin flips, but here's an array of possibilities.
But that's a different – forecasts aren't incentivized to do that. For media or even for active investors, the binary, it's the same in political media and pop culture media. Creating controversy, or in this case, creating binary, makes it a little easier to understand, a little more black and white, but you've never been a fan of that. You've never done it, but that's what gets the clicks. That's what gets the ratings. That's what makes then the money, especially for media, which needs advertising, and that needs eyeballs to stay on it. So that's why it's always been, it seems to me, the obvious way to handle it, to do it that way. As opposed to having several different outcomes, you only have 2.
So there's two responses to that. One is all forecasts are marketing, plain and simple. You don't need to make a forecast. You don't need to make a prediction. It's not a game. It's not a spin of the wheel. It's not a casino. Why do you have to answer this? Why do economists use 2 decimal places to prove they have a sense of humor? But the other thing is, you know, whenever I give a presentation in front of a room, one of the questions I love to ask is, what does media sell? And people always say advertising. I say, no, you guys have it backwards. They sell you. Advertisers are the buyers. They're buying your time, attention, and today, cross-reference with the internet, your shopping history, your credit score, your all these other things. But you're the product that is being sold to the buyers. They're the advertisers. And so, of course, shit is outrageous. Of course, there's an endless amount of clickbait. And that's before we start talking about algorithmic social media that has perfected the use of A/B testing and iteration to create the greatest amount of engagement. And the way they do that is outrage and emotional enthusiasm and just pushing your hot buttons. If you're ever on Twitter or Facebook and you start to get angry, hey, that's not an accident. That is by design. If we could stimulate your fight or flight response, we'll hold your attention. We'll have the advertisers have more eyeballs see them. It's really an insidious, terrible business model. And the reason it's around for this long is because it's so damn lucrative.
Exactly. So damn lucrative. Let's go to part 2 of the book. It's Bad Numbers, Economic Innumeracy, Market Mayhem, Stock Shocks. And I like this. The whole book is written in the same way that we always talk, the way that you talk with me, the way that you talk with anybody, using behavior, using research, using examples, anecdotes, and experiments to explain why we think the way we think, why we do what we do, and obviously end up in our behavior when it comes to investment. But this is probably the hardest one for me to understand because it gets a little bit more wonky in Bad Numbers. What do you want to say about this section of the book? Again, bad ideas, bad numbers, bad behavior, and finally good advice. We're at Bad Numbers. What do you want to say about this section?
The most important thing people should know is the power of compounding. And I use a couple of examples to show that, but my favorite is 2 guys go off to World War I in 1917, and they each have a small fortune. One has $1,000. They both have $1,000. One of these 2 guys buries it in mason jars in the backyard and hides a note for his family to find it if he doesn't come, in an envelope to be opened on my death. And the other invests it into the stock market. 100 years later, the family, the first guy, finds the note, and they go open the mason jars, and it's $1,000. And what's $1,000 worth today compared to a century ago? Less than 5% of its original value. $1,000 100 years ago buy you a house, could buy you a horse, could buy you a farm. Now it buys you a nice tasting menu at a good sushi place, maybe some clothes or a decent bicycle, but not a whole lot more. And if you, the guy who put $1,000 into the stock market in 1917, when I tell people, hey, what do you think this is worth a century later? Oh, it's got to be worth hundreds of thousands of dollars. Hey, it was $1,000. What's it worth today? $1 million? And you tell people $32 million, their heads explode. And that's the power of compounding. So the biggest lesson from the bad numbers section is try not to interfere with the market's ability to compound. Every time you get in the way, every time you buy this, sell that, because you heard somebody on TV, or every time you let me just step out of the market till we get some clarity, again, because you read something that somebody said, you're interfering with the market's compounding ability. And just don't. You're not smarter than the market. Listen, I don't know a lot of people who got the financial crisis more right at the top and more right at the bottom than me. I don't want to manage money that way because I can't tell, was I lucky? Was I skillful? Was it just good timing? I don't know. I honestly can say I went on TV the day before the market lows in March 2009. It was a coincidence that the way the school schedule worked out that year, I was on vacation with my wife, who's a teacher. So we got home Sunday night. When we broke 10,000 on the way down, I said to a buddy, hey, if we get anywhere near close 6,800, don't let me be that asshole that doubles down and says 3,400, because I've witnessed that time and again. You have permission to kick my ass if I do anything like that. So I get home from vacation on Sunday, and the first person who calls is like, dude, I know you're away, but we're spitting distance of 6,800. In fact, I think we were just past it. So I'm like, I'm ahead of you. I wrote up my note. Hey, this is what I wrote 2.5, 3 years ago. Every measure of sentiment, valuation, money flows, they're as extreme negative as they get. When the crowd turns into an ugly mob, I want to be on the other side of that trade. cover your shorts and go long. I sent that out. I want to say it was Sunday night. And then I get a phone call or an email from Henry Blodgett. Come on, you want to talk about this? Come on Yahoo TV tomorrow. Henry had built a Business Insider and was a famous Wall Street hooligan himself. And so I went on and I said, cover your shorts, go long. And then the next day, the market bottomed and took off. And it was dumb luck. If the calendar was different, I would have said the same thing. A month earlier, a month later, it didn't matter. But through that dumb luck, I more or less got it right. And we run $5-point-something billion. I don't want to sling billions of dollars around based on my gut that morning. That's just insane. But that's what a lot of people do.
Plenty of people do it. By the way, a keen listener will realize that you've mentioned at least 3 times vacations. It sounds like every one of your anecdotes says, I had just gotten back from vacation. When are you not getting back from vacation?
So, fair question. Again, when your wife's a teacher, you are stuck on the school calendar. So you're traveling the worst times of year. You're traveling with everybody else's kids and places are crowded.
God, I wish I had a violin sound effect for you.
But I will also point out that most of my adult life, we didn't really go on vacations. It was I only want to say it's the past. Once I turned late 40s, I started to have a little bit of scratch to put together to be able to afford to go on vacation.
And while your wife's a teacher, you guys don't have kids, and you have done well, and I'm just busting your chops. I don't want to get off the book. When bad ideas don't die, you write, people love experts to tell us what's going to happen in the future. Never mind that their forecasting track record is awful. We prefer the mysticism of the television guru to our own actual thinking. Here's something that should give you pause. The more confident an expert sounds on TV, the more likely he is to be believed by viewers. And the more self-confident they seem, the worse their track record likely is. Forecasters who got one big outlier correct are more likely to make bolder predictions in the future that tend to be wrong. I love this because I think it applies not only to financial advice and financial media, but certainly to political media and other. You also write about not knowing things. And I started my career in radio by telling the boss of political programming at Sirius, he told me, you got to stop saying, I don't know, Pete. And I thought, no, that's the whole appeal. I want to be the opposite of all these assholes who know everything about everything. The power of I don't know actually builds credibility is the truth.
100%. They misnamed your original show on Sirius. It should have been I Don't Know with Pete Dominic.
That's right.
Because the whole theme of your show was
bringing on people
who
do
don't know, but let me bring an expert in who I can ask questions of, and he can help educate me and my listeners. And so I was always a fan of that concept. In Wall Street, there is very much this fake it till you make it sort of attitude. And most of the big houses have training programs, and the first week of your training program is modern portfolio theory and asset allocation and how to build a bond ladder and blah, blah, blah. And that's the first week. And then the next 51 weeks for the rest of your training year is sales training. And it's all about listening to the customer, being self-confident, and attempting to sell a product that addresses, notice that's the word address, not solve, addresses their needs. And so if you have to be self-confident, considering you're a green newbie, fake it till you make it is a really useful technique if you want to put up good sales numbers. The flip side of that is a lot of what we do in finance requires you to be humble, to admit how little you actually know. It's not just about what's happening in the future. We know very little about what's going on right here and now. And to acknowledge that, to acknowledge the role of luck and serendipity, to acknowledge how little we actually know about today and even less about tomorrow is very in opposite versus the way so many people came up in finance. And so I wanted to hammer that home. I love the examples in the beginning of the book, Squid Game and John Wick and the Beatles and just all the films that the studios passed on. You shouldn't feel bad for not knowing something. And I reference the Enron CEO and chairman berating an analyst who had the temerity in a call to say, wait, I don't understand your business model. Are you telling me that you sign 10-year contracts and instead of recognizing the revenue in each year, you accelerate it and recognize it all in 1 year, in year one? How does that work? And they just yelled at him. You're so stupid. How do you not understand it? Actually, he was really smart and figured out that Enron was a fraud and asked them in public. And this was before anyone had an inkling that they were a fraud, that it was all accounting gimmicks. But he was like, this doesn't make sense. I've been trained to understand this stuff. So my answer has always been, if you don't understand something, say, I don't really understand this. Can you explain this to me? And if a company or an investment fund doesn't want to explain it to you, they're not worth your time or your money, and move on.
Who was the name of the investor played by Christian Bale in The Big Short?
Michael Burry.
He's an example of being smart, watching something and realizing it doesn't make sense against all the rest of much of the rest of the industry. I feel like I'm thinking of somebody else like that would fit.
No, that's the right guy. And every Michael Lewis character, I've been lucky enough to interview him a bunch of times.
Yeah, no, he's got a new book out. Did you know that? With a bunch he got a new book out with a bunch of different writers. I've got it here.
Who is Government?
Who is Government? That's right. Yeah.
I just had him on the podcast last week, and I'm doing a live interview with him April 7th in Fort Washington.
Oh, very good. Let me ask you about part 3 of your book before we run out of time. It's called Bad Behavior, Avoidable Mistakes, Emotional Decision-Making, Cognitive Deficits. What do you want to say? What's the most important takeaway here? Give us an example of what we learned in part 3.
Sure. So the emotional, I'll give you a quick one of each. The emotional side is obvious. We evolved to adapt on the savannah to challenging conditions. We have neither fang nor claws nor armor. We're chewy and delicious. And so we have to work cooperatively to stay alive as a species. And that has led us to certain subroutines and emotional responses. Fight or flight is built into us. Bill Bernstein famously said, your fight or flight response, your amygdala, is part of your limbic system. Your success as an investor is determined by your ability to control your limbic system. Fail to control that fight or flight response, fail to control your limbic system, and you will die poor, is a quote in the book. And so that's a key thing, is the way we react emotionally is for an imminent threat that is an existential risk right then or there. And you have to decide, can I do battle and hold my own? Should I run away? That is the wrong approach when the market gets volatile. You're trying to pick muni bond fund, when you're deploying capital. Reacting fast and emotionally, simply a poor substitute for thoughtful, contemplative decision-making that carefully measures what we know, what are the risks, what am I giving up by doing this, what is my potential upside, as opposed to running around with your hair on fire.
That's emotional decision-making. What's avoidable mistakes?
So I tell a story in the book of, I call it the billionaire trifecta from hell.
Right.
Got a family, a long story, but they're very successful. One of them ends up starting with an oil company, which eventually gets bought by Houston Gas and Oil, which later changes its name to Enron. And they're managing their own portfolios, and because he's on the board, because the son is on the board of directors of Enron. When the news starts going bad, he hangs on and rides $2 billion worth of Enron down to zero, which seems insane. And then he rolls out and says, maybe I should get some help. And because they were a Jewish family in New York, active in philanthropy, eventually they met a guy. It was inevitable they were going to meet some guy named Bernie Madoff. And so, of course, that goes to hell. And they're like, you know what? I've had it with all these stocks and stuff. And so they roll into FTX and Sam Bankman-Fried. Talk about
crypto.
And by the way, they're fine. So the Madoff recovery was about 95% of whatever money you gave them. The FTX recovery was like 115%. You actually did better. And they still have enough money. They're fine. If you go to the north wing of the Metropolitan Museum of Art, that's the Belfer statue wing and gallery.
That's the name of the family that you're talking about.
So they're okay. And they've been very generous with a lot of colleges and a lot of art.
Oh, thank God they're still super
hospitals.
rich.
So they're fine, but
good.
Nobody
I was
wants
pretty
this
worried
$2 billion.
I was pretty worried about them when I started reading that chapter. I was like, I hope they're all right. You never mentioned that they're fine in that chapter, so people miss that out. But I'm so glad. I was like, oh my God, I hope
literally a footnote. They'll be okay.
Belfers
You'll
still
see.
have billions of dollars after all these avoidable mistakes that you list.
Can you do it yourself? Do you have the skill set? Yes, but you have to be disciplined and you have to have a plan. Should you trust somebody else? Yes, but only if they're a fiduciary and are legally obligated to put your interests first. And third, do you want to try this wacky new product? Hey, it's a crapshoot. You're rolling the dice.
I'm out of time, but I want to do more on this book. I'd love to host a live chat and answer questions.
Let's do that.
A book chat. Anybody who buys the book can join us. How Not to Invest. Go get it right now. Barry's joined us for years. This is his second big book, and we're real excited for it and for you. And I hope it's a bestseller, and I hope
So far, so good. Number one on Amazon in stocks and investing. So
there you go.
Yeah, at least in terms of new releases.
Very impressive.
I'm excited about that.
A lot of people were worried.
It's very gratifying.
You would not be able to get a new watch, but it looks like you should be okay. A lot of people were worried about Ritholtz. The Belfers, Ritholtz. Thank you very much, my friend. Awesome as always.
My pleasure. Anytime, Pete.
And we'll get to conclusions the next time. That'll be part 2. There'll be many parts of this interview. All right, that's it. Get Ritholtz's new book, How Not to Invest, and we'll get him on ASAP to talk about the tariff chaos. But thank you very much for listening to today's show. For everybody who has upgraded their subscription to the show, I really appreciate it. A couple of those happened this week, so I really appreciate that. I'm thinking of Claire. I just saw that this morning. Thank you very much, Claire. You can always pay a little more than you are if you're paying the minimum $5 or 10. People pay a lot more, whatever you can afford, whatever you're getting out of it. This is independent media. It's just me doing it. Your money goes all directly to me, except for the percentage that Patreon takes. But go to patreon.com/Pete Dominick right now. And if you're looking for alternative ways to pay, you can always talk about that. StandUpWithPete@gmail.com is my email address. John Carroll writes and performs all of the music. He's got a new album, johncarroll.org. Go get it right now, and I'll talk to you tomorrow.